Yo, 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 CPA Strength here, back with another video. This is gonna be my best income tax video ever. Income tax tips or whatever's. Anyways, before we get into this video, I'm gonna make this quick, but please subscribe to the channel. Do it for yourself. Guaranteed good luck for life. Serious. So subscribe to the channel. You like good luck? Also, if you like this video right now for good luck for the rest of your life. You like good luck? Okay, let's get into this. This is gonna be standard deductions versus itemized deductions. I'm going into my 7th season as a tax preparer. I've done thousands of 1040s, which is where the individual tax returns, that's the form that the individual tax return is called. So I've done thousands of these. Try to explain the difference between itemized and standard deduction every year. Let's see if I can explain it. And let's just go here. Let's just do this real fast. Standard deduction versus itemized deduction. They're deductions. Or. I know the or. Standard or. Yeah, this is gonna be a one take, Timmy. Standard or one or the other. You don't get both, you get one or the other. You can pick one. So if you only get one, you're gonna take the deduction that is the higher deduction, because that lessens your income. Let's say you have 20, so anyways, you can pick one. So whatever's higher, standard deduction or itemized deduction, whatever's higher. The standard deduction is based on your filing status. There's 5 filing statuses. Alright, but anyway, this is the 1040, you can't really see. There's 5 filing statuses. And each one of the filing statuses, I can go over them in a different video if you'd like, but each filing status, depending on what you are, single. I pick single because I'm forever alone. You know, let's say you have $20,000 of income here. And let's say you have 20,000 of income on this first page. 20K. On the second page of the 1040 here, line 40 on the 1040 says itemized deductions or standard deduction. So it's an either or. It says it right here. So you say, well, how do I know what my standard deduction is? Well, you're going to be one of the 5. You're either going to be single, married filing jointly, married filing separately, head of household, or qualifying widow. It says it right here on the left-hand margin of the 1040. And you can get these 1040s on the irs.gov. If you're single in this current year, they change every year. They might double next year, I don't know, but for this current year, 6,000, it says it right here, 6,350. So you know your standard deduction. Is my itemized higher or lower? Well, so that's the question. That's the question. If it's lower, if it's only, see, and you get to deduct from your income. So if you had 20,000, and let's say you only have 2,000 of itemized deductions. Let's say you have 2,000 itemized deductions. So you have 2K here. 6,350 versus 2K. Well, you're going to take the higher, so because this is your income. This is what you're going to pay tax on. Your taxable income is your income. You're going to minus whatever deduction is. So 6,350 is what? Ooh, let's see. See, that's the standard deduction. Let's see, if that was 7,000, it'd be 13,650. So that'll be your taxable income. Well, then you have more. Then you have a personal exemption, but that's something totally different. I want to do this really fast, but I just want you really have to know one or the other. See, why wouldn't, if this was only $2,000, I mean, if your itemized is only $2,000, you would not want to deduct only that, because if you did that, then you'd have 18K instead of 14K or whatever. So it's whatever is the higher deduction. You want to deduct as much as you can from your income. because you want to pay less taxes. Most of the time. I've had clients that want to pay more. Yeah, that does happen. It's one or the other. This has turned out to be a little too long of a video, I'm sorry. What are some of the itemized deductions? Some of the itemized deductions are real estate taxes, mortgage interest. If you're on a W-2 and have a lot of employee expenses like drive your own car, charitable contributions, medical deductions, there's really a whole list of itemized deductions, and that's on a different form called a Schedule A. We'll go over to Schedule A in a different one if anybody wants to see that. See, these would all be on Schedule A. Now, usually I usually ask, hey, do you own your own home? Do you pay real estate taxes, mortgage interest? Because usually if you don't have those, you have to have extremely high other deductions. Usually if you don't own a home, you're not itemizing. You know, usually if you own a home, because you have to be higher than your standard deduction. So sometimes you have head of household, which is like almost 10,000. Married filing jointly is like 13,000. So it's always different, but you get one or the other. And I guess that's the main point I wanted to make in this is you get one or the other. You don't get both. This is definitely long enough. I've talked for long enough. Hopefully I can cut this down a little bit. I just wanted you to know you get one or the other. You either get a standard deduction or an itemized deduction. These are some of the itemized deductions on Schedule A. You're probably not going to itemize unless you own a house. If you don't own a house, you're probably going to take the standard deduction. Anyways, that is the video for today. This is CPA Strength, and I'm out. Deuces.